The question on everybody's mind is it gold or Bitcoin? When you're looking at gold, understand that that can be the stabilizer in your portfolio. It's not something that's going to make you rich, but it is something that's going to gain money over time. And gaining value over time is something that's incredibly important. If we're looking at something like Bitcoin, you have to know that's where your alpha is coming from. That's where your major outperformance could be in. It is the thing that could make you a ton of money. However, you can't just sit there and put all of your money in because something could happen. You could lose 50% of it. You could lose 80% of it. This thing has major volatility. So you want to have a smaller position in the thing that has major volatility over the thing that is going to be the stabilizer in your portfolio. Now, if you piece this all together and you have a small position in something like Bitcoin, your riskiest asset, you have a little bit larger position in something like gold. This is the thing that's just going to be the stabilizer in the portfolio. And you have a retirement portfolio, something like stocks, maybe some bonds. I wouldn't recommend bonds still at this moment. Maybe it's going to happen soon. But when you have your portfolio set up in this way, it is made to deal with all types of turmoil that could happen in the world. And now, as we're building that up, now you can create a trend following portfolio or whatever trading style you trade. If you trade a different trading style, that's fine. However you do it, this is where your major outperformance is going to be. That doesn't mean you can't, and this is what I try to show you guys in my long-term portfolio, my holdings for long-term, and my futures portfolio. I have things like Bitcoin that I might never sell, things like gold that I might never sell. But then I also have other things like my portfolios. I have my long-term portfolio. I have my futures portfolio. So between all of those things, my portfolio is made to handle just about all of the major times. And so going forward and looking now at the sectors over the year, the sectors are looking really good. If we're looking at, the XLK, XLY, XLC, the spider sectors are looking phenomenal. If we're going forward and going even higher up the list, we see that industrials are starting to turn up just a bit, especially over the last month. Real estate has really started to turn up over the last month and up 20% in the last 3 months, up 10% in the last month. That is a major move in the REIT sector, which was the major underperformer for most of this year. And so now that we're looking at financials too, financials also is up almost 15% in the last 3 months. 6% in the last month. Putting all those together, this could be a turning point to see more of a reflationary style trade. And what do I mean by reflationary style trade? These things like industrials, financials, even REITs can go up in that type of environment. Energy could start to turn up. This is what the reflation trade really is. And this is what overheating really is in the market. When all these things start to overheat and this starts dragging things like oil and energy and so on all up with that as well, that's when we start to put major pressure on the economy. This is when they will either start raising rates again or not. At the moment, they're not talking about rate cuts, but people are pricing in rate cuts. Do I think there's going to be 6 like it's talking about? No. I think that's nearly impossible unless there's a major crisis happening. What I do think could happen is that the Fed could get very comfortable. Let's say energy prices still stay stagnant around this zone. And then they get comfortable and they start to lower little by little on any little thing that happens. This is what happened in 2019. The yield curve went inverted in August. They started deciding they were going to do reverse repo and all these other things and start to cut rates just a little bit at that time. I think we could see a similar environment. They're going to want to make it very conducive to the sitting president at the moment. This seems to happen. This is what starts and elevates the presidential cycle. This doesn't mean I'm calling for a crash. This means I think that we have more upside to go more than downside risk at the moment, especially going into an election year. So I could see the first few months of this year being a little bit volatile, but after that, I think it's going to be smooth sailing into, probably midsummer. Summer's probably going to be choppy again. And then once we get into November and once the election happens, it's going to explode a lot higher. Whoever wins, it doesn't matter who wins. Some of you have been with me for a long time. You remember the trade in November 2020. The trade in November 2020 was one of our best 2 months of trading in the history of the fund. Why? Well, it was because everybody in the world was bearish. Around election times, this happens again and again. Go look at the chart. Go look at Trump's election in 2016. Go look at the elections before that. Go look at 2020. Once the election stopped, the market exploded higher. And it doesn't matter what side of the aisle you're on or whatever it is, it's just going to go higher once the election is over. People get very fearful when there's an election. They try to predict what's going to happen. And really, there's a bunch of, well, all we really know is that there will be a bunch of hedges on. And as all these hedges are on and people are trying to short the market out of fear on both sides of the aisle, once those come up, the market explodes higher. So looking at that, we could see a lot of upside in the market this year, especially coming into year end. And I think if there's anything, I would say the February March zone would be the time where we'd see some sort of consolidation pullback. And then going through the year, maybe the summer, we'd see some more consolidation, a pullback, and then probably end the year pretty strong this year. And that's the best I could say about it. Once again, these are predictions. This isn't trading. We will change accordingly over time. Risk management is everything here. And so we can't know what's going to happen in the future. We can just manage risk and prepare for what we're preparing for. And we're positioned well to profit on that as we have all year. We've had a great year this year. The NASDAQ trade went very well. The orange juice trade went incredibly well. Cocoa, some of our shorts and so on. We've had really great trades all year long. We're very blessed to have another great year. I'm glad all of you guys could come along with me on this ride. And let's jump into the charts. So chart one is small caps. So the small caps are quite interesting right now because everybody in the world has written them off. They thought they were terrible. Don't buy the small caps, especially there's a recession coming. Recession's right around the corner. And really, they weren't a place to be. They weren't the place to buy. You wanted to see it bottom out. Now, if you've ever read the book by Stan Weinstein, basically he's a technical trader, and he explains trends in a very simplistic way that's very easy to grasp. And basically, we're looking at here when we're seeing the consolidation on this chart from basically 2022 to now. That's a stage one. So basically that's a base. You don't want to invest on a stage one. You're just going to get chopped up to death. Then we broke out. We're above that 200 zone. Now we're seeing that there could be a run in the small cap zone. So starting out there, that looks really good. And you'll see that the small caps, going back to 2020, look at what I talked about earlier was the election. Now we see that big engulfing candle and that huge gap out. That huge gap was the election. And we continued just to run. You know, that's a huge run higher. You know, that's a great trade for traders to be a part of at that moment. So once again, I think we're closer to the beginning of small caps than the end. I could see small caps possibly being the outperformer going in next year. The next chart is the NASDAQ. So the NASDAQ breaking out, you know, the one thing, if you go back, you can see that I have a couple posts. I have a early post that I said that the market will make new highs. It was a very bold call at the time because this was in March, right after the banking crisis happened. Nobody believed that. Now seeing that the NASDAQ is at all-time highs, I'm really excited to see where this ends up. But once again, the NASDAQ could be the underperformer this year. We don't know. We're still long it at the moment. Trading isn't just going, hey, this looks good. Hey, this looks bad. Let's do this. Let's try this. It's risk management. We're long the NASDAQ as long as the trend is up. We will change when the trend changes. We don't just go, hey, I think the small caps are going to be great, so I'm going to move into small caps. That would make trading a lot easier, but it just isn't that easy. Now, this is NASDAQs against the small caps. So putting them both together, you're seeing that we did see that kind of that was a head and shoulders pattern that kind of showed up. from 2020 into 2023. It's not, I mean, I've had somebody argue it's not a head and shoulders. Sure, it's not exactly a head and shoulders. If you really want to break it apart, we could say it's a cup and handle, whatever you want to call it. It's consolidation. And there's a shoulder there. We broke up over that shoulder. That's when that major run in the NASDAQ kind of happened. We saw major outperformance. And so especially against the small caps, it moved up a lot higher. But we saw it break out to the upside and then reverse. Most of the time when that happens, that can lead to a really fun trend coming up, meaning that small caps could be the outperformer coming into this next year. Transports against the Dow. Old school Dow theory. Some people say it's just too old, it doesn't work anymore. I've seen it, I've found it useful all these years still. And it's especially useful to just look at to understand where the market's doing and where the relative strength is. Right now, it's not in the transports. It's not in the transports at all. The Dow is actually broken out to all-time highs, which is amazing to see considering the market environment that everybody says is going on. The market is actually at all-time highs in the Dow at the moment. Transports underperforming. We want to see transports also get up here. If you're looking at that last part of the chart that's happening right now, we want to see it take out those old highs around 17,000. Next chart is semiconductors. So semiconductors against the Dow, same thing that you were looking at on the transports, but we are seeing major outperformance in the semiconductors all year long. And this is the place where you wanted to be. Everybody thought this was a dumb trade. I had so many friends tell me how stupid this trade was. And really, like, that's just how markets work. Price drives fundamentals. And sometimes the market is seeing things that we can't see. And I think my biggest strength is knowing that I don't know anything. I don't know anything. And so I have no problem thinking the market knows more than me, and I'm just going to follow it as long as the signals are right. The next chart, this is the S&P 500 against the Dow Jones World Index. So I just wanted to point out here, somebody brought up when I talked to Steven about when was the world stocks in Europe and all that, the outperformer. And so right out of that bottom that happened in October, that's when we saw that. We saw that Europe, and we started buying these European stocks in 2022, the end of 2022. A lot of you might remember that, and we had some of them coming into this year too. But we see that there was major outperformance in the world index at that point. And now we're kind of see that roll over again. I could see it as an area where the small caps and the world stocks, global stocks, start to be the outperformers and outperform the United States for a little while here, coming up into this year. Now, next chart is a bull bear indicator. This basically just kind of tells me when I should be cautious and when I shouldn't be. If we're looking at the lines, when we're in between these red and blue lines, we're kind of looking at a neutral zone. Don't really want to be long, don't really want to be short, kind of looking at that neutral zone. When we're firmly below the red lines, that's time you could be short. And basically it kind of gives you guardrails or bumper rails, like when you're bumper bowling. You're not going to make any stupid mistakes when you kind of have a chart that kind of tells you when you should be bullish, should be bearish, or just out of the market or neutral. And so right now we're firmly into the bullish zone. Next chart is Bitcoin weekly. What a amazing chart this has been. And basically we had only one chop out in this trade in the futures portfolio. Long-term portfolio, it's been along the whole time. And so what we're looking at here is at the top, you're seeing band squeezes. What that means is volatility is tightening up. And then we break out to the upside, and that creates a very strong move to the upside. I'm loving the way Bitcoin is looking right now. Really, we had to get over that major resistance zone. And it's a zone that's been on here all year long. If you paid attention to any of my videos, that zone, the big blue line, has been on there all year long. And we cleared it, and we quickly went from 30,000 to 40,000. That's normal. We just had to get over major resistance. So I think we can at least get to those old highs soon. And then that we're going to see a lot more consolidation at that point. If we get over those old highs, this thing could explode a lot higher. Next chart is Canadian dollar. I had to make a little note here. Sorry, it's kind of sketchy. The COT charts, they don't look like that. So basically, when we're looking at the Canadian dollar trade, we're seeing that the COT, the commercial buyers, started buying like crazy. And so as the commercial buyers are buying like crazy here, we're seeing that we saw a bottom in the Canadian dollar. So basically, we're seeing a bottom in the Canadian dollar. It's moving up. I really think if we break over that resistance zone, and this chart looks very similar to the small caps. If we break over that resistance zone, there's no telling where this one can go. I would suggest getting long the Canadian dollar. Yes, it has moved up a little bit from the bottom. Yes, it looks a little extended, but if you really zoom out, there's a lot of room for this to run. And also that's going to start putting some pressure to the upside on the oil complex and the energy complex. And so the next chart, sorry about the title, it got messed up, but it just said, do not buy the yen. Every single person I knew, I went riding the other day and I had friends of mine that know nothing about trading telling me that they were thinking about buying the yen because it's so cheap. They don't even know what the yen is. I'm not even kidding. They asked what country the yen was in. They keep hearing they should buy the yen. If you look at it up here, we're seeing that commercial buying that was so strong fell off a cliff quickly. Open interest fell off. I wouldn't want to touch this just yet. I would want to see some strength behind it. I would want to see retail flows change a bit. This isn't looking good just yet. I would definitely give it some time on the yen. The next chart, GDXJ to GDX. So GDXJ, basically, what we're looking at when we do relative charts like this, what's the riskiest sector in the gold mining complex? Well, it's the juniors. So there's even smaller, there's the explorers, but starting with the juniors are riskier than the majors. So seeing that broke out a little bit and trying to move to the upside, we're really starting to see that the gold miners are starting to show some relative strength here. We're seeing that it took out the old high. Let's see if it can continue here. You know, the gold mining complex looks great here. You know, we had this great outperformance in the juniors, that last run that we had. Maybe we'll see that again. That was the run in 2020 to the end of 2020. Maybe we'll see that again, but I'd like to see that to get really bullish on the complex. We are long GDXJ and GDX at the moment. We are long, basically that can be managed by either buying the ETFs or majors and miners, or major gold miners and junior gold miners. But right now, long the complex looks good. I could see more upside in gold miners. Next chart is the energy to the, so CRB is basically an energy index. Yes, it says commodities, but it's not, it's mainly oil, gasoline, like the energy is a huge part of it against bonds. So basically, as this is moving down, we would say, hey, we want to buy more treasuries, we want to buy gold, we want to buy growth. And as it's moving up, we want to do the other thing. Basically, we want to buy more energy, value, ags, and short treasuries. At the moment, we're in this neutral zone. And you saw basically all year long, from the end of 22 to basically midsummer, when we had the pullback and the correction in the market, we saw consolidation here. And then we saw an explosion higher. We did see commodities start to take off a little bit again. And then towards the end of the year recently, now we're seeing it go the other direction. So gold has done really well. Treasuries are starting to pick up. Growth stocks obviously doing well. I would stay that route until that changes, but right now we are sitting on cloud support. So we're at a point where it has to move one way or the other. I just want to put up a chart of wheat. It's one of our trades, has worked really well. Basically that breakout point in December was a great entry point. We consolidated. We will probably move higher. The best thing to do with commodities is have small positions. You have to have small positions in commodities or you will get blasted. So because you have to be able to handle pullbacks like this in the primary uptrend. Yes, you could trade them very, very short term. I know a few people who try to do that. But the safest way to do it, small positions, wide stops, let it run. Let's see where it goes. US sectors, consumer staples, has done poorly this year, all year long. We're seeing things like technology of 55% on the year. We're seeing communications 52% on the year. Consumer discretionary up 40% on the year. This is the areas that you wanted to be all year long. But coming up behind it, we're starting to see the industrials, the builders, and real estate. So these are areas we're going to be wanting to pay more attention to coming into this year. We are long industrials. We do have some REITs in our portfolio as part of our yield complex. Financials also is in the portfolio again now too. So I'm really looking at that reflation trade kind of happening here. All right, guys. Hope you guys enjoyed. Hope you guys had some good holidays. We'll talk soon. I want to do predictions of what's coming up in 2024. That'll be the next video that I'll put out coming up in the next week. So, all right, guys. Hope you guys had a great year. It's been a blast hanging out with everybody and getting to know everybody. Please feel free to hit me up. Please like, share, subscribe if you think this will help somebody. It's only going to help me build a better product for you guys. My goal here is to just build the best product I can for you guys, help you guys trade, and be available. You know, some people put these things together and they're not available for people to talk to. I'm always here if you guys want to hit a question off me. This is why I do so many spaces groups. This is why I do the Zoom groups. This is why I put out videos. Comment, share, subscribe, ask me questions, whatever you guys want to do. I'm here to chat. And it's not every day you guys get to talk to somebody who does this full time for a living. So, all right, guys. Hope you guys have a good one. And we'll talk soon.